What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. We are going to be talking about gaps, trading puts, shorts, going through it all, looking at the picks from yesterday. So if you're ready, guys, let's step into the war zone. So first and foremost, welcome back to the stream. And why don't you guys let me know where you are tuning in from tonight so that I can throw you up on the screen and give you a shout out. And then let's go ahead and retweet our stream here so we can bring some more of our friends to come and learn. So live now, come for hot dogs. And you can't pass that up. All right, so here we go. So Raju from London, Patrick from Montreal, Mukesh from Pennsylvania, John from Northport, Florida, Campfire from Minneapolis. I don't know. I think that's Minneapolis. I think so. Jer from Northeast Pennsylvania, Abhishek from Boston, Fanzi from Texas, Chris from Denton, Texas, Emma from Ottawa, Andy from Muskoka, and let's hit it with one more. Boom. HK Zone in the building from Orlando. So welcome. Thank you, guys. All right, so let me go ahead and just check the stream, make sure we're playing optimally here. I just want to make sure that we have good audio, etc. Okay. All right. So it looks like we are good. So we're going to start off with the picks from yesterday. So the first one that we were looking at was SPY. And SPY had a very rare double inside bar pattern. The last time we had a double inside bar pattern like this was actually, I think, 3 years ago in 2018. So because of that tight consolidation, we knew that there were a lot of traders that were very anxious. They were trapped in longs. They were trapped in shorts. And we actually had something very important that I did not talk about yesterday because I forgot. And I wish I did. But you can see this right here, guys. We actually had this impulsive leg from the Fibonacci book. You guys know about these, right? This was a big push down. And then look at this, guys. This double inside bar was actually sitting on the 618 Fibonacci. So, you know, as we always say in trading is fractal in nature. The same patterns we were seeing on the 5-minute and the 3-minute chart, 1-minute chart are the same patterns that are happening on the higher time frames, guys. So this was actually a very beautiful pick. I was not expecting such a large gap. Obviously, there was a little bit of news involved, but there's always news involved, guys. That's what they always want you to want to tell you. So you got to just be able to adapt as a trader, take your trades, and make your money. So a lot of people asked me right off the bat this morning, so how do you trade when we gap down below the trigger? So the trigger was right around here, and you could see that we gap down way below the trigger. So you guys know what to do, the guys that are here on the stream. How do you trade that? Based on, you know, if you guys have the, well, first of all, hit me with a 1 if you have your book and you are prepared for class today. Hit me with a 1 real quick. Let me see. You guys have your books. You guys have the Trading Wars books. Let's see who brought them to class today. Get the pen and the pad out. We'll be taking notes as usual. So I see all the ones. Thank you guys so much for the support. So whenever we have a gap down like this, guys, this gap down is very dangerous because you could see it's a significant one. It's large. And right off the bat, we had the opening range breakout, right? So here's the first 5-minute bar. Let's hit the replay. Okay. And let's just go slowly. So, oh, that didn't work. Can I do it like this? Forward. There we go. So there's the first 5-minute bar. So the opening range breakout, what do? Well, we say, all right, if it breaks the high, we're going to buy calls. If it breaks the low, we're going to buy puts. We're going to short. Next bar comes in, boom, we break the low, we pull back just a bit, and then we start to get that beautiful push through. So right around here, you're gonna want to be like, remember what I tell you guys? How many legs do you want to be looking for on your trade? How many legs do you want to be looking for before you really want to be scaling out? Well, how many legs do you guys think? So that's something that I talk about quite often. Generally, we are looking for 2 legs on a push down or up. 2 legs, because the human has 2 legs. We're looking for 2 legs. And then we're going to use those 2 legs to help us really get out of this position. So right here, guys, if I take the Fibonacci, so this is the morning leg from my book. You guys know about this. We pull it down right there. You can see this right here. We just had a micro pullback. Nothing big at all. But what this does is it gives us targets on the way down so we can start scaling out, right? Boom, right? Look at this, okay? You see how beautiful that pop is at the 786? This is why I'm teaching you guys this stuff. I'm teaching you guys these things, these measured moves, these legs, because look at this. There's an algo right there. So you want to be the one that's covering your position on the way down instead of letting the algo flip on you. And in this case, we get another leg down, but that's not the point. I believe we get one more leg down here on SPY. Let's see. Yes, we get one more leg down, but this leg right here is not a probable leg. You see what I'm saying, guys? This is not probable. So we want to do what's probable. And if you get out here with you and you have time on your side because you're doing your expiry is going to be a little bit earlier because you're getting out earlier than if you held it to the end of the day, you can really get a big home run. So that's the thing with options too. You have to remember, if you hit your target quicker than waiting till the end of the day, for example, you're actually going to get money. You're going to get paid for that time value, which is very important. All right. So very clean, man. I really don't know what else to tell you guys. You guys are experts now because you guys learn, you understand, you guys are good. So let's keep going. So you could see right here, right around the measured move, you see 1, that's the measured move. We're stalling. Okay, we're stalling. And I'm gonna go in overdrive real quick right now. I'm willing to go in overdrive. I'm gonna show you guys a little bit more advanced things right now, but you gotta hit me with the 3 real quick. You got to hit me with the 3 real quick, and we're going to go into overdrive, and we're going to get deep. Okay, but give me those 3s. And let me just point this one out right here, actually. Had a nice little inside bar that came in at 12.15. A very, very tight, small bar. Let's just go to the alerts, make sure that came in today. So here are the alerts in the private Discord. Right there. Where is SPY? Oh, SPY is in SPY. My bad. So we have a section for just SPY right there. Okay. So there we go. So there we go. So we had all of our inside bars here, guys. All of the alerts. In the SPY alert section, I actually have the 5, the 15, the 30, and the hourly because, as you guys know, I trade SPY a lot, and I have traded it for many years, and it's very reliable. It gives you a good chance. And that's all we can look for as a trader. So we got that inside bar right there, guys. So even if you missed all of this push down, you could take a shot right here and say, all right, I'm going to take a shot here. I got a tight little defined risk, and I'm going to give it a shot. And that one was a beautiful rollover also. So now going into overdrive, this is what I want to talk about. So now we get a holy grail at the bottom of the range. This is coming around, right around that afternoon time. So that's a time where we're looking for those reversals, right? After these pushes down, we're looking for these reversals. So we have this. I'm going to zoom in very to give you guys some more details on this holy grail. Let's go on this holy grail. Let's look at this. So we got an outside bar, inside bar. We have a holy grail, trading wars holy grail. What we're going to do here, we'll take the Fibonacci. I'm going to put it on this candle. Okay. Like this. And let me just expand this out so we can see it better. So I just want to show you guys something here. So check this out. The candle breaks. We go to the 272. And this is actually something a little bit advanced. And this is actually what we call the inside bar fake out trade. So sometimes, right, you might not want to take the break of the inside bar. You might actually want to take the fake out. And that's a strategy that I'm putting together right now, and I'm working extensively through the fake out strategy. It's incorporating the fibs when we have these breaks and then these false breakouts that become reversals. All right, so you can see here, we broke through the level. We came to 272. Algo stepped into the game, and check this out. Oops, where did we go? That was the low of the day. Okay, so I don't know. Are you guys interested in that inside bar fake out strategy? That's something I've been working on behind the scenes. Um, it's very powerful when you have the right context and environment. And in this case right here, we could see, right, this holy grail was after a long move down. So we had a high chance that this could be the low of the day with that holy grail. We get that fake push and then the pull up. But even if you didn't take that one, check this out. You get this inside bar right here. That was a beautiful push up there. And then even this one later in the day, a nice push down. All right. So hit me with a 7 if you're actually interested in the inside bar fake out strategy. Hit me with a 7 so I get to see how much of you guys are into that. Or if you're fine just trading the inside bars just directionally, that's totally fine too. It's totally fine. It keeps it simple. The fake out is a little bit more complicated to trade. You don't have to do it, but I just want to know, how do you guys feel about that? Oh wow, that's a lot. Surprised. Very, very good. So this is what we're gonna do, guys. So we have little bro here on the stream. We also have myself here on the stream. And what we've actually been doing, guys, is we know the existing strategies that we work. The existing strategies that we have work, but we want to add more dimensions to the trading because it's almost like you're hedging yourself. So like if you take the inside bar breakout and you also take the inside bar reversal or the fake out, you're basically hedged because one side should win. Unless we just go completely sideways, then you can get hit on option premiums, which is not really too likely with inside bars because inside bars are already consolidating. So usually you're going to have a directional move. So essentially, we're going to hit the breakout and then hit the reversal at the same time. So one of these are going to have to play out. And with proper money management and with proper targets and trade management, you should be able to walk away with some profits if you play it the right way. Boom. Dylan T with the $5 super sticker, brother. Let me check that out. I will be actually taking a trip to Starbucks or something right after this. So that's going to come in handy, brother. So we got to keep it up. Thank you very much. All right. So I'm really excited about it. I think it's great. But yeah, like some of you guys I'm reading right here, everybody likes simple, right? So I'm just putting that out there for the advanced guys in here and the advanced girls in here, and also those people that are looking to hedge their longer term plays or just hedging their portfolios and in general. That's something I am working on. So let's continue. So the next one we had was Comcast. Let's check it out. So Comcast was a beautiful trade because you can see this right here, guys. If you can see these two white lines, can you guys see these two white lines right here? Hit me with a 9 real quick if you can see these two white lines. This one right here and this one right here. Can you guys see it? So these two white lines are my triggers from the previous day. So one of the ways that we can also trade when we get below the triggers is we can actually take something that we call the retest, right? So this candle, you could see how huge it was. I would never take an opening range breakout with a candle this big because then I got to put my stop all the way down here, somewhere over here, and then I'm going to be asking for too much of a move. So generally when the candle is very, very big, I'm going to skip the opening range breakout. But as you can see with the triggers, if on a clean day here, we can get a retest, right? This is what we see, a retest. We come back into the trigger, we get all the wicks, the rejections, and then we roll over. So that's the importance. So if it comes back into the trigger, you can also take that because this trigger can actually become an area of resistance. See what I'm saying? Can become an area of resistance. All right, so we got some super stickers coming in. We got $1.99 from Jamel Bay with the thumbs up. Thank you very much, brother. Appreciate it. And my brother right here again, Jonathan Brassfield with the $4.99. Keep the trade education coming. That's what I do, brother. That's what I live for. That's what I'm here for. Try to educate you guys, help you guys make some money. All right. And then I want to show you guys some Fibomania. Okay. The Fibomania, we're going to do it right now. All right. So Let's hype it up. I'm gonna do a Fibomania right now. Okay, Fibomania. So hit me real quick with a 10. And we're gonna do a superpower Fibomania right now. All right, and I'm gonna show you guys how I look and do these fib plays. Okay. All right. So we come into the trigger. We have this push down, right? So obviously we had the retest of the trigger. You're looking to play that bearish side. So you missed the trigger. That's fine. We take the Fibonacci from this high right here down to this low. We come right here. We have that 618 rejection. So if you miss that push down, that's fine. You can take it right here, 618. You also have a nice inverted hammer, which you can short as well. So that is 1. Okay. Now we're going to do something called the sequence leg. All right. So we're going to do the sequence leg. So you can see right here, guys, that this wick slightly breaks this wick. So we have a new low. So now we can take the sequence fib from this high to this low right there, guys. Now look at this one. Boom. Again, another 618. This one, a nice 786 rejection. Okay. And then we continue again. We make another leg. We make a new low. So now we take an anchor point. Okay. Put it there. Put the anchor point over here now. Now look at this one, guys. Look how beautiful this is. Perfect. Do you guys see this? So 1, 2, 3. Look at this one. This one is actually picture perfect. It's exactly on the 50%. Okay. So again, boom, we tag the 50, we come down and we make a new low. All right. So now this one actually right here, if we take the anchor, so this is what we call sequence Fibonacci leg. If we take the anchor from here now and we bring it down here, this one actually fails the Fibonacci, but this one is coming into like that lunchtime session. So what I like to do there is actually like to take the full range. See that? So these are all the things I talk about in the Fibonacci book, guys. I like to take the full afternoon leg. Okay. When you're doing sequence Fibonacci, you're going to get 2 or 3 of them. Then you want to zoom out, take that big picture leg. Now look at this. Okay. Here's the big picture leg right here. And the big picture leg comes right back to the 50 again. Look at that. We come to the 50. We have that doji. Okay. Boom, boom. Beautiful play down. And then we come around the 272, right around this area. Double bottom, pop, come into the close. And look where we end in the close, guys. Check this out. Right on that 786 extension. So that is beautiful. Those are what I wrote the first book about, the Fibonacci book. But what I'm trying to show you guys is low risk entries. You might miss the move. You might miss it, but you can always come back in on a pullback. That's the power of Fibonacci. You come back in on that pullback. Okay. All right. So hit me with the 3 if your mind is blown off of that. Hit me with the 3. Hit me with a 3 if your mind is blown off of that one. That one was beautiful. I could just see the legs. I could see it. There's more. I could draw a lot more, but we'll be here all day. How do you do this during live trading hours? Fibonacci is all about retracements. So whenever you're thinking about doing Fibonacci, think about retracing. When it's pulling back, listen to me carefully. When it's pulling back, then you have the Fibonacci drawn. Because what you're trying to say is this: when we start coming back, where can the next resistance be? Where can the line in the sand be? All right? That's what we're looking for. And I talk about this extensively in my Fibonacci book. So let's move on. All right. Riot. Now, so Riot was, again, another inside day close. Like, look at this one. Riot was very clean, man. It doesn't get any better. Let's hit the replay right here. I love Riot. Look at this. We had that inside bar close yesterday. So tell me real quick, what's happening to the option premiums with that inside close right there? What's happening to the option premiums? Are they increasing or are they decaying? Look at this tight range. You see this, guys? We've been in this tight range, very, very tight, very narrow. We had inside bars. We're tightening up the range. The option premiums are going to be decaying now. They're going to be decaying because when you go sideways, options don't like that. They don't like that. They want moves. So we get them for a deal. So now what do? Well, we come down to the 5-minute chart. As you guys know, in the drill down book, you come to the 5-minute chart. We have a trigger. We have the trigger here and the trigger here. Okay, that's the first thing. We also have the opening range breakout. We have fractal trading and we have Fibonacci. So here we go. Here's the first 5-minute bar. Somebody please tell me what we can do with this one. What can we do with the first 5-minute bar of the day? What page is that on? Tell me what page it's on in the book too. I'm testing you guys. What can we do with the first 5-minute bar of the day? And what page is it on? Testing you guys, all right? Okay, so opening range breakout, correct. What page? Tell me the page number. I'm testing you guys. You guys said you got the books out. Yeah, well, I guess technically it is kind of on page 1 because I do talk about it a little bit. But there we go. Page 12, page 9, page 14. Mentioned it a few times. Okay, great. So here we go. Here's the first 5-minute bar. So if it breaks above the high, we're looking for those calls. It breaks below the low, we're going for the puts. In this case, it's pretty nice if it breaks below the low because we also have the trigger. We also have the trigger right here. So we could see like a kind of like when you're looking at this trade, can somebody link this? All right, good. When we're looking at this trade right here, guys, we're basically anticipating, well, if this low breaks, we could probably break the trigger also, right? And then check this out. Beautiful. So there we go. We break the trigger. We break the low and we break the trigger. And there is our follow through. Very, very beautiful. Okay. Very, very beautiful. I love it. Okay. And then look, we have a Trading Wars Nirvana right here. A little push back up. Nothing too much. But that's where you got to be. That's where you got to be, right? And you want to take the first pushes off the day. Those are the most reliable, and the rest we kind of chop around, as you can see, right? But definitely something here. We had a nice fib leg. This is the afternoon leg. We take it from the high to the low, right around here, 236. You see that right there? Exactly on the 272. We come and we trade exactly to the 272, and that's where we reverse. All algorithms, all measured moves. It's very, very beautiful when you see it. And when you see it, you'll see it, guys. It'll take some time, but when you get there, you'll get there. Someone is saying, take a look at the 3-minute. Yep. So 3-minute is also valid. And I mean, oh man. Oh my God. Now look at this one on the 3-minute. It doesn't get any better than that, right? Check this out. First 3-minute bar. Then we have a nice inside bar. Beautiful. Very good, my friend. I hope you played that one. I always switch between the 5-minute and the 3-minute. I have found that the 3-minute chart has a very higher risk to reward, obviously, because the candles are going to be smaller. 5-minute chart is a lot slower. It's better. I guess it's not better, but it's easier for newer traders to manage, right? Because the time factor. It takes 5 minutes for a bar to close. All right, so we are 24 minutes in. I feel like I'm going in slow motion today. So let's move on to the next one. Oh my God, I gotta turn. I'm about to turn this stream off because I'm getting too good at this. Look at this. Look at this, guys. The two white lines are our triggers. Okay, first 5-minute bar comes, triggers, opening range breakout, boom. Now Fibonacci morning leg right there, boom. Okay, pull back, trade right to these extensions, and we actually have a little bit more of a leg down, but that's where you want to be, the chunk. Okay, take that chunk. 1 leg, 2 leg, later. That's really where you want to be. 1, pull back, 2nd leg, out. This 3rd leg is not really reliable. Like, even though we get that push down there, this part of the trade is not as reliable as the first part. I mean, getting too good at this, guys. Getting too good at this. Let's move on. We had the bonus pick today, which was actually CRM. So CRM was one of the picks from the bonus picks for the members. So CRM was a little bit difficult because we had that gap down here. Let me go to the 5. But the opening range breakout did not trigger, but we had that beautiful inside bar right there. And then that's all she wrote, guys. Okay. So for the members, you guys know what you got to do right there. Boom, coming in short right around there, right around this line, coming in short. You have a nice tight stop right up here. Okay, no problem. You missed that one, no problem. Take the Holy Grail down. Okay, you missed that one, no problem. Let's put a fib on here. Okay, pull back right there. I mean, look at this. Look at this. Is this sorcery? Is this sorcery right here, guys? What do you guys think? Is that sorcery? Like, how can it be that precise? And you see these bonus picks that I'm putting out there for the members, I'm trying my best to take really good picks for the members. I'm trying my best because I give a lot to the free community and I'm trying to give a lot back to the members. So this one was for them. And I know you guys banked on that. I mean, that's just insane. Actually insane. If you guys want to, you don't have to trade the fibs, guys. If you want to just trade the inside bars, totally. I love stacking the fibs on top of the bars. And the first book, guys, I wrote a lot about the fibs. And I think it's very important to understand them because even if you don't want to use them for trade entries, you can use them for trade targets, which is very important. Very, very important. All right. So those were the picks from yesterday. We did a nice breakdown, guys. When there's a gap in the market, either a gap up or a gap down, don't panic. You guys know what you got to do. Go to the Trading War setups. Look for your plays, opening range breakouts, fractal trades, Fibonacci, inside bar, Holy Grail, Nirvana. Use the indicators to give you good risk to reward opportunities and just take your shots. Take your shots. Take your chances. If you're having a bad day, have your max loss in place and step aside and come back tomorrow. If you're having a great day, don't get cocky, lock in your profits and come back tomorrow. That's all it is. It's like a job. You got to clock in, take your trades and clock out. And that's the thing about trading. It's really not that, it's not that different every day. It's pretty much the same thing. It's pretty much the same thing every single day. We're looking for the same setups. Is it better to buy the fib book or the latest book on sale? I'm a new trader. It depends. If you want to trade mostly on fibs, get the fib book. If you want to do the orbs and the bars, then you should get the drill down book. But both of them come with 1 month for free in the private room. You could get 1 month for free so you can come and ask questions and hang out in the room and see the trades and all that. Boom. All right. Hey, we got a big donation up in here from Jenny D with the $10 super sticker. Thank you very much. Yeah, we are upgrading from cappuccinos. We are going to Americanos now. Or is it the other way around? I don't even know. But thank you very much. Thank you. I saw the thank you emoji. I thank you for being here. All right. So there it is, guys. I just wanted to, I mean, for me, it's kind of I'm pretty much doing the same thing every day. Trying to help you guys the best that I can. So why don't you guys hit me real quick with a 5 if you're good and you learn something and you're happy. Are you good to go here? What setup do you trade daily? I try to mix it up. I mix it up, guys. I mix it up. I take orbs. I take triggers. I take as much as I can because I have a large account. So I try to mix it up. I always try to mix it up. I don't ever want to be too much on one side of the on one side of the coin because that might be the day that coin's not working. So it's harder with small accounts. If you have larger accounts, you can take a lot of trades as long as you're, risking appropriately, So what I do, eventually you guys will be able to get up there. You will. It just takes time. What else? What else did I want to say? Some of the swing trades have been a little bit harder this week. It's been kind of like a day trader's market, to be honest, because there's been a lot of trickery, a lot of traps, a lot of news, a lot of bull. But that's the name of the game. Sometimes the day trades are going to be killing it. Sometimes the swing trades. That's why we need to have a balance of both, because that way we can get the best of both worlds. Sometimes swing tradings is very, very hot. And that's why I always split up my money, have different accounts for different purposes. But there we go. What else did I want to say? So alerts, guys, if you want to come hang out in the room, we have a members lounge, we talk, etc. Trading Wars, you know what we do over here. I already got the picks posted for tomorrow right here. X Cat Coin Plug. We'll be looking at that tomorrow. Don't forget to sign up for the giveaway if you haven't. I've already announced 4 winners. We're gonna announce some more winners later on. Please sign up for the giveaway. I try my best to give back as much as I can to the community. I don't think there's anything else that I want to talk about. Just the book, guys. Tradingwars.com. That's the only place you can get it. Right here, guys. So this is the Fibonacci book right here. Fibonacci and options. Okay. Everything comes with 1 month in the room. And then we have the new book, the options, the drill down method. Get 1 month for free. Nirvana indicator, golden indicator with alerts. And I think I missed a donation. Hold on. Boom. Sassy Trades with the $9.99. Let's check this out. Thank you. No, thank you. Thank you very much for being here. Man, it looks like I might be able to get like one of those cookies from Starbucks, I might be upgrading tonight. I might be upgrading. Yeah. So that's it, guys. I'm working on a lot of different projects. My goal is to continuously grow as a trader, to get better, to make more money, to give more to the community. That's all I'm trying to do, man, is really keep pushing it to the best of my abilities. And my little brother's here, and he's going to be, he's trading and stuff like that. And I want to see him grow, and I want him to share his journey with you guys. So make sure, guys, if you want to follow his journey, make sure you are following Trading Wars Holy Grail Pro. This is our Holy Grail channel. So everything here is about the Holy Grail, and you get the free indicators right there. Throw them on your chart. The video you watch on how to trade it, and we have an example. And then the other one we have is Trading Wars Double Inside Bar Trader. So that's the other channel. So little bro is managing those and trying to get there, guys. So we're on the grind as usual. All right. So why don't we take a few questions real quick, and then I'm going to head out. Give me a few questions. Whatever you guys want to talk about, let's do it. And then I am out. Going to make a move. All right. And then one more thing I want to say is please like the video, subscribe. I'm telling you right now that nobody does what I do. I'll just be honest with you. I've been in the game a long time, and I decided to do this because it's about time that people get the education that they need in this world. Very, very simple. How old are you? I am 69 years old. I'm playing. What else do we got? All right, so this is what we're going to do right here. Okay, let's go. Do you always draw the fib projections top to bottom? It depends on the impulsive leg. If the impulse is to the downside, then we go top to bottom. If the impulse is to the upside, then we go bottom to top. Do you invest in index funds? Yes, I do. I have a tax-free account that I do that. If you're interested in an overlay for stream, let me know. I'll make you one. Just need the logo. All right, brother. Yeah, I mean, DM me. We can figure it out. Fractal trading. Fractal trading is essentially, so the Trading Wars patterns, the patterns that we have are the inside power, double inside power. We have the Holy Grail and the Nirvana pattern. So what fractal trading means is if your higher time frame is, let's say, an inside bar. So let's say the daily chart is an inside bar, and then on the 5-minute chart, you get an inside bar. That's what I call fractal trading, which means it's an inside bar and an inside bar. So that's what I mean when I say fractal trading. And I wrote about it all in the book. How do you come up with profit, target, exit on automated trades? So we can use the Fibonacci extensions for your targets, or you can use just a straight risk multiplier. So, if you risk $100, you're going to take your profits at $100, for example. Can you talk about tax-free account? I can't, unfortunately. I'm not allowed to talk about those things. What do you do when the trigger has been triggered before market open? Do you wait for another IB or B? Can you follow the initial plan? Yeah, so you just drill down at the open. If the trigger is broken before we gap, then you look at the orbs, you look at the fractal trades, and you look at the fibs. Those are the three that you want to focus on. Is your TradingView linked to your broker? Not yet, which sucks, but I'm a affiliate and partner with TradingView, and I think they're working on it. So they're working on getting us linked to Interactive Brokers, which is the broker that I use. All right, last thing that I want to say before I leave is this. The inside bar fake out strategy is essentially a combination of the Fibonacci with the inside bar to measure where the fake is going to be. It's a reversal. It's a reversal trade. Reversal trades are very powerful because you're buying. So let's say if it's tanking, you're buying calls. So you're going to get calls for cheap. If it's ripping higher, you're going to be buying puts, which are going to be very, very cheap as well. So what I'm trying to say there, guys, is actually, I think I can make it work. I have to do more testing and more trading, put up my own capital behind it to make sure that it works. But if you guys are interested in that, I know there's a lot of beginners here, so I don't know if it's appropriate. But if you guys are interested in the inside bar, the fake out strategy, if you're interested in the inside bar fake out strategy, then just let me know in the comments of this video. So at the end of this video, you go and comment and you say inside bar fake out or whatever, IB fake out. Okay. Or just say, I want to learn more, whatever. Just let me know in the comments so I can understand the audience. And maybe we might do some private sessions on those because I don't think it's appropriate for every level of trader because it is advanced. I don't want to confuse anybody. All right. So hit me with an 8 if you think that's a good idea. Hit me with the 8 if you guys think if that's a good idea. The process is usually for strategies is, creating, back testing, and then actually putting my own capital, put maybe $100,000 worth of money behind the strategy to see if it actually makes money. Because it's one thing to strategize, back test is another thing to actually trade. Because there's a lot of nuances to trading. There's slippage, there's broker issues, there's spread. So we got to actually put money behind it to make sure it works before we even give it to you guys, because that would not be fair. Do you have a video on how to set up scanners? All the scanners are in my room, brother. And if you're a member, it's in there. You can just copy and paste those scanners and do what you got to do with them. But those are for my members. All right. So that's it, man. I appreciate you guys. I appreciate all the donations. I had a good time. I know sometimes, the market's up and down and it doesn't matter at the end of the day. What matters is that you have a plan and you execute it, because having a plan and executing a plan is what's going to make money in the long run. You cut out all the noise. You look at your performance on a quarterly basis, a monthly basis. You never look at your performance on a daily basis. You always look at it on a quarterly basis. Walmart doesn't care what sales they have today. They don't care. If Walmart has a bad day with sales, they ain't going to close down. But a lot of people are willing to close down once they have one bad trading day, because human psychology is so messed up. But from a corporation perspective, guys, if Walmart has one bad day of sales, they're not closing down. So why are you closing down? Why are you shutting down on your dreams? Why? There is no easy way to achieve what you want to achieve. Only the consistent people will still be here, though, and only the consistent people will reap the rewards. And my message to you guys is always look at the bigger picture. Look at your results over 100 trades, 200 trades. Never get boggled down into one bad day, one bad losing streak. Always look at the big picture. That's my message for you guys today. I appreciate you guys greatly. Thank you very much and have a great night.